On the monthly chart, the NASDAQ Index remains in a decisive structural uptrend. Price action is positioned well above the Ichimoku Cloud, with both leading spans widening and pointing higher, clear evidence of a long-term bullish regime. Momentum has been powerful since the mid-2022 base, and although the RSI sits deep in overbought territory near 76, there's no authentic sign of exhaustion. MACD remains firmly positive, signaling that institutional flows continue rotating back into technology and growth. The thick cloud support between 20 and 21,000 forms a formidable base that would require a major macro shock or policy reversal to break. Fundamentally, the environment still favors equities. Inflation is easing, the Federal Reserve is signaling early 2026 rate cuts, and liquidity conditions are improving. At this time frame, the NASDAQ Index isn't topping out. It's simply advancing to a new equilibrium zone after an extended bull run. On the weekly view, the secular strength continues. The index trades cleanly above the rising Ichimoku Cloud. The Tenkan-sen sits above the Kijun-sen, and the cloud itself is expanding, a textbook configuration of trend persistence. RSI holds in the upper 60s, showing momentum cooling but not reversing. The MACD histogram is contracting slightly, hinting at temporary fatigue rather than distribution. A weekly close below 24,000 would be required to signal genuine structural risk, and we're not close to that. Fundamentally, breadth across the market remains broad, corporate earnings are resilient, and global liquidity remains constructive. This time frame portrays a healthy bull, pausing for breath, not rolling over into a bear cycle. On the daily time frame, we can see the mean reversion phase in progress. Price still trades above the cloud but has pulled back toward the Kijun-sen around 25,100 to 25,200. The Tenkan has flattened, signaling short-term consolidation, while the Chikou span is catching up with price, the market digesting recent gains. RSI sits mid-50s, neutral and balanced. MACD has printed a mild bearish crossover at the zero line. This indicates a cooling of momentum, not trend failure. Fundamentally, this soft pullback is driven by sector rotation rather than risk aversion. Capital rotating from mega caps into cyclicals and mid caps. News flow is calm, volatility muted, and the technicals suggest a correction within an ongoing bullish structure, offering opportunity for disciplined accumulation. On the 4-hour chart, the NASDAQ Index is testing the underside of its local cloud. The short-term picture is neutral to slightly bearish after the swift rejection above 26,000. RSI sits near 46, signaling that selling pressure is fading and the MACD histogram is improving. Early evidence that momentum is stabilizing. The expected pullback zone sits between 25,400 and 25,600, with a possible extension to 25,200 before buyers regain control. That range represents the tactical buy-side accumulation zone inside a much larger bullish regime. Taking everything together, the macro, sentiment and technical picture, the backdrop remains constructive. Inflation is moderating, monetary policy is tilting dovish, and earnings growth persists. Sentiment data show neutral retail positioning, steady institutional longs, and a stabilizing cross-asset risk tone. Technically, all higher timeframe structures point to an intact bull market, while this short-term retracement offers improved entry risk-reward. This is not a market on the verge of a crash. It's a market cooling off after a powerful run. The base case remains bullish continuation once this correction completes, with targets near 26,500 initially, then 26,900 on extension. Only a sustained break below 24,000 would shift the narrative toward a true bear phase. Until that occurs, the NASDAQ Index remains firmly within its structural bull trend, temporarily on pause, but far from finished.